Yes guys, welcome back to another video. You're locked in and learning with Vel. Now in today's video, I wanted to share with you guys the difference between trading gold and trading a currency pair. Now look, it's become a thing of the trend. It's become a trending topic right now, which is trading gold. You know, influencers, social media traders, every man and his dog is talking about trading gold, right? When the reality is gold is the most extreme high risk pair that you could possibly trade right now. So in actual fact, gold right now would be the most dangerous pair for you to trade. It wouldn't make any sense. It wouldn't be sensible. It wouldn't be recommendable. If you've got years of experience in the game, then of course. But if you don't, then in today's video, I'm going to break down the difference between trading something like gold today and what gold was doing years ago, compared to also how you can successfully navigate the Forex market without needing to ever look at gold again. Now, with that being said, I know I've just mentioned a big statement here, guys, but it's going to take patience for you, and it's going to also take some open-mindedness, and that is what's going to be able to help you guys get to the end of this video and realize that Forex pairs can pay you just as well, if not better, than gold. Okay? So with no further ado, let's get straight into this. Now, I'm going to share with you guys something really simple first for us to just observe, right? And what I'm going to do is I'm going to mark out this recent candle with gold, okay? And what I've just used is a price and date range, okay? Now you can see here, this candle is it says 4,416. Really, it's 441 pips. That's how big this 1 hour candle is. Let me zoom in for you guys to see it. Let's make sure we're on the money though. Right here, okay, 439 pips. Okay, this one candle here is 439 pips in 1 hour candle. Okay, now let me tell you guys how this works. I'm going to clone this zone, okay, and I want to share with you, I want to just show you guys this date and price range. Let me just make it a bit more smaller. What was it, 439? Yeah. What does this one say here? Hold on. Let's zoom in to make sure we're not. All right, cool. 439. That's the bottom of the zone. This is the top. Okay. 4399. Yeah, accurate. There we go. 4399.5. You couldn't get more closer than this. Okay, now why have I shared this with you guys? Well, I've shared this with you guys because I want you to understand this is called a date and price range. So what we're going to do is we're going to go across to the left, and you're going to see, I'm going to go back as far as, like, let's say 2024. Okay, we're on an hour time frame here. So I'm just going to go back past this year's data because I want to show you guys what this range of 440 pips, right? Let's remember what it was. Yep, 440 pips. Okay, 440 pips. Now, what date is this? This is still 2026. Okay. All right, hold on. Let's just make this a lot easier. Okay, what's this? 2025. I mean, we could even go 2025, to be fair. We can go right here in 2025. Okay, what is this? May, January, February, March, April, May. Okay, this was a good time. Now, remember, this zone, guys, is 440 pips. Yeah, 440 pips. On the hour time frame here, this same range, okay, you can see from this candle here. If I zoom in just to show you guys, okay, this candle, this green candle from this bottom to this top, it says here 370. So basically with this date and price range, what it would do is any candle I hover over, it's going to show you the distance of what this measured zone is. Okay, so we both know that this box is 440 pips because it's the same size. But 2 years ago, oh, this is 1 year ago, but last year, 440 pips. This is what 440 pips looked like, okay? Last year, this same size was 370 pips. Do you understand? Let's go back even further, because this is really important. A lot of you guys who are trading gold, you've never taken a moment to understand the significance of what gold is doing. You know, I've been trading for 8 years and I've seen gold traded in the lows of, you know, $1,200 an ounce. $1,200 an ounce. You know, I laughed at a guy when he told me gold would go up to, you know, $1,500, let alone $2,000 an ounce. So understand, I've seen the transition, guys. Just like how we've all seen Bitcoin go from 500 or 50 pounds to £100,000. You know, I've seen gold really go from $1,000 to $5,000 an ounce. So doesn't make me an expert, but it just makes me have a bit more experience to be shared. It makes me valid to have an experience that I can share with you guys to help you guys avoid making silly mistakes, unnecessary mistakes. Okay. Now look. Back in 2024, this is January 2024, right? This same 440 pip candle, same 440 pip zone was the space of, you know, 2 of these candles, almost three. Okay, 1, 2, 3. 3 candles was 440 pips. This same hourly candle here, okay, we've seen equates to a lot more. What do I mean by that? I mean, well, that same candle here, if that was in 2026, it would probably be 200 pips right there, or 400. Look at this one here. Look, down here to here, 1, 2, 3, 4. You know, if you see 4 candles like this in today's market, it's a lot more. But for you guys, just to understand what I'm showing you here, this says that this range here is 222 pips. That's what this range is here. 2 years ago, this same box that we've highlighted, that's meant to be 440 pips. 2 years ago, guys, this box is actually 220 pips. So what does that tell you about the market? That tells you that right now, gold is throwing out more pips, right? It's throwing out more pips. It's more. People always throw around the term volatile, volatility. You need the markets to be volatile. Without them being volatile, there's no motion. If there's no motion, you can't make no paper, okay? But what you need to understand here is the pip count has increased almost tenfold, and that's what's more dangerous. That is what people aren't really understanding. You would think the argument is that because gold moves more pips, you can make more money, right? That's what the argument is. You can see here again, the same zone was 223 pips. Guys, this same zone, if we go back, I'm going to show you one more example now. Let's go back into 2025, okay? Just so you guys can see. Right, what is this? 2024 still. December here. Okay, cool. Look here. We started getting bullish 2025, January. Okay, cool. Now look at the same zone. Right? The same zone. I'm going to go from this low down here up to here. This same zone here is 290 pips in January 2025. 290 pips. This same 440 pip zone is only 290 in 2025. So you need to understand here, guys, right? The way gold has been moving over the past 4 to 5 years is it's getting more and more aggressive, right? And this can be a positive, but it can also be a negative, because this now means you need to have a wider stop loss. When I used to trade gold, okay, I could have a 45 pip SL. When I used to trade gold, if I got into a buy down here for gold, let's open a buy position. Let's say I wanted to buy off of this candle here, yeah? Let me show you 45 pips. Let's turn this off. A 45 pip zone was here. Okay, so let's say I'm buying off of this candle, right? I'm going to buy off of this bearish candle when price comes back to the zone, yeah? Look, price pulls back into this candle, okay? And when it pulls back into the candle, 45 pips is enough space for price to breathe and to still drop with a heavy candle, turn around and push up And before it comes down and hits our SL, of course, we would like to think that we would have banked some profit. But then price pushes up, it comes back and it goes away. My point is, in today's day and age, right, 45 pips looks like this. This is what 45 pips will look like. That. So the odds are now stacking against you for your trade to be profitable, unless you're accurate. And if you're accurate, you've got pinpoint accuracy, then that's not a problem. But to those of you who don't trade prop firms, if you trade a live account with a broker, then you've got to take into consideration the spread. And the spread now means that actually, with you trading a tighter stop loss, your spread could stop you out of the trade whilst the trade could still be valid. So we still need to have a bigger SL, right? Now, when we fast forward to where we're currently at today, okay, let me show you what 45 pips looks like as an SL. Let's say we want to buy out of this candle here, okay? 45 pips. Like I told you guys, okay, this is 45 pips. That's 45 pips. This here is what 45 pips looks like today. Whereas what we just saw was, 45 pips was about there. So by you guys understanding this simple thing right now is going to help you understand the risks involved in trading gold. Now, I'm going to go over to XAUUSD and I'm going to show you guys something, okay? Let's say we take a buy off of this candle here. Okay, now I usually always used to have 35 pips on currency pairs and 45 pips on commodities, right? 35 pips on XAUUSD. What is this? This is the daily time frame, right? Goodness gracious me. That's a 30 pip zone. Let's go on the hour time frame. Okay, on the hour time frame, 35 pips is this. Let me turn this tool off. 35 pips is this here. Okay, that's 35 pips. Now, some of you can understand what I'm trying to say here, and some of you can't. Some of you still can't comprehend that the reality is you've got more leverage, you've got more space for price to breathe trading a currency pair. The only argument some of you would say is, oh, well, currency takes long, gold can move 200. You just shown us, Vel, gold's moved 440 pips in a day. Why on earth would I want to stop and trade another currency pair? The reason why is because when you actually understand, it's not about how many pips you need to catch in the market. The aim of the game here is not to say that I'm catching 4,000 pips. The aim of the game is to make money. So if we understand the aim of the game is to make money, then actually less is more. When I was young, I'm not going to lie to you, I thought to myself, everyone used to say, stay away from gold, it's high risk. And I used to say, well, if it's a high risk pair and I learn how to trade the high risk pair, then it's going to make me a better trader. And one could argue that that made a lot of sense. But because of the transition gold has made from going on average 200 pips to 300 to now 400 within the same space, that is showing me, yo, this is getting more dangerous. The risk is getting much more higher. And now what I'm having to sacrifice is killing me. Right? Before I could sacrifice 45 pips. Now I'm having to sacrifice 100, 200 pips, 100 pip range and still potentially get stopped out. Let me know in the comment section if you've jumped into a gold trade this year, your setup was valid, but it's tapped you out and then gone back up and then come back down, tapped you out again, then gone back up. And then you said, okay, cool. If it retests again, I'm going to get in. You've come back down, it's retested, gone back up and again, come back down. And before you know it, you've taken 4 or 5 trades and each one hasn't reached its potential, but each time gold looked like it was going to reach its potential. Let me know in the comment section if that's happened to you before, because the problem with gold is that it's very deceptive right now. It's at an all-time high. For those of you who used to trade Bitcoin last year and the year before, gold has just swapped the roles of what Bitcoin used to do. Bitcoin would spit 1,000 pips within an hour, easily. Now Bitcoin doesn't move as mad. Gold is taking that center stage. So my thing is this, if you've got less than a year's experience trading, why on earth would you be trading an asset that can shorten your time and your journey it can shorten your it can shorten your journey in trading, or I should say it can just make your journey unprofitable. It can increase the probability of you failing, of you blowing your account. Why would you do that? Why would you trade a pair that can ruin your day quicker than a currency pair? Because look at this, guys. Let me just go back to the comparison here, okay? Let's say we get into a buy here for Euro USD, right? Now, the first thing I want you guys to understand here is this. If we're trading with a 30 pip SL, let's just say, okay, to make it easier, let's say 25 pip SL, okay? If we're trading with a 25, I mean, personally, right nowadays, I'm looking at trading no more than like 15 to 20 pip ranges. That's what I'm personally looking for when I'm trading currency pairs, okay? 15 pip is kind of really what I'm looking for, especially if I'm trading EU. 15 pips is more than enough. So I'm going to give you an example that actually makes sense as opposed to just being generic, okay? So let's say I take a trade off of this zone here, okay? Now, first things first, the difference between trading gold and trading a currency pair, well, the first thing that we have in common, is what you're risking in your stop loss. Your risk is your stop loss, right? So if you've got, let's say, I don't know, 100 pip SL, and that equals 5%, then obviously that means your 100 pip SL is 5%, meaning you now need to be up 100 pips to be up what you're risking, right? You need to be up 100 pips to actually be up 5%. So what I do when I look at any pair, but what I do most importantly when I'm trading currencies, is I look at the average range that price usually moves. So on average, if I have a look at this range here, up here to here, okay, this is 75 pips. If I come across and I look at another range, let's say in here, from this high down to this low here, 70 pip range again. Okay, let me look at this range over here. Let's go from this low to this high up here. Oh, look, 75 pip range again. Okay, let's go over here. Let's check this range here. Okay, this range here is a bit bigger, 130 pips. What I'm doing, guys, is I'm just having a look to see how much does Euro USD move by. You know, this is 255 pips. I'm trying to figure out what's the average I'm seeing this move. Okay, we don't want to see the most spectacular moves. Of course, those moves are nice to be involved in, but we want to see the average movement. We want to see what does price do for the majority of the time. What is price doing? And all I'm doing is I'm just looking for ranges. I'm looking for ranges and I'm measuring these ranges. Okay. Again, look, if I go this high to this low, this range in here, okay, that's 87 pips. This here is going to be obviously a lot bigger. It's probably news that impacted this range as well. Okay. So I can tell that when there's a news output, there might be 160 to 190 pip, 160 plus pip range. But on average, we've seen 70, 75 to 80 pips. Okay. So based off of me understanding this, now when I'm trading a currency pair like Euro USD, I'm now saying to myself, okay, cool. So the smaller the stop loss, okay, the better it is for me, number one. Okay. But number two, the less I need to catch. I know on average, EU is going to move 75 pips, right? It's going to move 75 pips. So if I'm risking 5% on the trade, just for example, yeah, or let's just say I'm risking 1% on the trade, yeah, across 15 pips, yeah. When I'm up 15 pips, that's 1%. When I'm up 30 pips, that's 2%. When I'm up 45 pips, that's 3%. Do you understand? 45 pips is 3%. So by the time we move this down here, let's find 75 pips. By the time we get to the average range, okay, by the time we get to the average range of what EU does, what's this? 75 pips. That's a 4-to-1 R&R. We've made 4% off of this move here. Now, on the flip side, you would need to catch 400 pips. If you're risking 100 pips as your SL, you would need to bank 400 pips on gold in order for you to be profitable, in order for you to bank 4%. Right? Now, I'm not saying that that's not possible, guys, but some of you are misconstruing the fact that you feel like you need to have more pips in order to be more profitable when you don't. And the problem with gold is that when you trade gold, you can make so much money with gold so quickly that you don't value it. You can make thousands in seconds, so much so that your endorphins have started to be released, but you need more because your job's not done yet. I've just made 4 grand within the space of a couple of hours. To some people, guys, this isn't going to feel real. Versus trading gold. Versus trading Euro USD, getting into this buy down here and having to wait. This is a 2-hour time frame. So 2, 4, 6. Okay, so you get into it on 9 a.m. Wednesday, and it fulfills your profit by Thursday, 7 a.m. So you've got to wait a whole day, pretty much. A whole day. And I tell you what, guys, if I make £4,000 over a day, it's going to feel a lot more hard earned than making £4,000 in seconds. And I'm talking from experience. I've made 4, 5, 10, 15,000 pounds within minutes trading. But that same attitude or that same mindset didn't allow me to withhold the profit, because I was always getting back into the market at some stage. I might make 15k in a day, but I haven't stopped because, hey, that was just the first trade of the day. You know? Whereas with currency pairs, these trades are not always going to bang straight away. So it's actually going to help your psychological, it's going to help you develop psychologically, because you're not going to be into the markets thinking everything's a given, everything must come now. It's not the reality, guys. People are trading gold because they want money now, they want money quickly. But the real question is, unless you're prepared to withdraw all of the money in your account right now, you don't need to take the money right now. You don't need your account to go up tenfold right this second. It would be nice, it would feel nice, of course, but the hardest part in this game is not the skill set, it's actually the mindset. And gold right now is at an all-time high for being dangerous and for ruining people's mindsets. That is the most honest opinion I could give you. Gold is a clickbait it's a clickbait topic. You know, everyone wants to trade gold. Everyone says that they're a master at trading gold. But gold, a lot of people won't share with you their losses with gold. And the reality, when I think back, is I've made a lot of money trading gold. But if I have to look at all the currencies I've traded, the most money I've ever lost in my whole trading career has been on gold. You know, I've lost most of my money trading gold. No. I'm pretty sure I've lost the most trading gold. I've won a lot, but I've lost the most trading gold. If I compare gold to a currency or to an indice, gold has taken most of my money. So even for myself, it's a reality check in where we're currently at right now, and understanding the transition of, gold was tradable years ago. It was. Now it doesn't make much sense. And at one point, the currency market was dying out. Last year, if you guys remember Q3, Q4, the currency market was dying out. But I tell you, the currencies are back right now. I really would. And I would just share with you guys the importance of understanding the higher time frame is king. If you guys are looking at currency pairs off of a higher time frame, you find your entries on a lower time frame, and you should be able to hold these trades, right? You should be able to hold these trades. If we look at Euro AUD, okay, let me go on Euro AUD. I sent out this sell. Okay, I sent out this sell last week in the community, right? I sent out this sell. That's actually so interesting, because this chart that I'm looking at right now is a chart that I use for YouTube. So my actual markings is not on here, but this marking has an eye level there. So that's actually really cool, because what I done was I looked on the weekly chart, and on the weekly chart, I went onto the line graph, and the line graph showed me that we were still bearish. Despite many saying that we're bullish, we're in an uptrending market, I'm looking at the fact that we failed to make new highs, we're coming lower, we're making a new lower low, and we failed to make a new high. So I went onto the daily, and straight away I wanted to fib the high to low. Okay? So when I fib the high to low, from here down to here, right, you can see that this Fibonacci is in line with my institutional level, which is amazing. But we're going to ignore the institutional levels for a second, okay? We fib this high to low, right? After we fib this high to this low, we see that it's in our kill zone, right? It's between the 62 and 70%, which is amazing. We see the reaction, price starts coming down, okay? we go down into a smaller time frame, like a 4-hour time frame, for example, and we try to find reasons for another possible entry. Okay, we find an imbalance tool up here, which helps us. Whether we get into the trade at this point or not, it doesn't really matter. Okay, at this point up here, as long as you get into this trade, because you have to remember the higher time frame is showing us that this is a sell. So off of the higher time frame, you know, we can go into the Discord community, and I sent out the sell trade for this. Okay, I sent out a couple of sells for this, and I put it in the Telegram for free. I put it inside the Discord, and the reason why this trade is important is because when you're able to get into a trade that you can hold for a week or 2 weeks, or 4 weeks, etc., this is going to teach you to be more patient. It's going to also allow you to not have such a aggressive mindset. It's going to teach you to understand, being patient pays. Okay, I can show you guys over here. This was the setup we had, right? So we had one sell up here, we had a second sell here, and price is still coming down. Yeah. Now, my point, let's just draw this out here. Let's say we get into the trade from this pullback here in this candle. Okay. Let's just say here. I want to show you guys 35 pips looks like this on Forex. 35 pips looks like that. Let's go down. This is Euro AUD, so it's not Euro USD no more. So on Euro USD, I can have a 10 pip SL. For Euro AUD, I'm gonna give it a 25 pip range. I'm not gonna lie to you. Okay. Now, even if we get stopped out once or twice, okay, the thing that I like about currency pairs, let's say we get stopped out here, but we re-enter here. Okay. The thing that I like is eventually, if you're in the right direction, you're going to make everything back plus more. And remember, we're using the higher time frame here to understand what we're doing. So the higher time frame is showing us right now, this is the 200 pip range. This is the 8-to-1. If I'm risking £100, I've just made 800. If I'm risking £1,000 off of this trade, I've made £8,000 profit. I need you to understand that 200 pips versus 1,000 pips over here makes more sense with currencies. Think about it. If I'm risking 100 pips over here, and 8-to-1, okay, is here. I need gold to move 800 pips. I need gold to move 800 pips, whereas I need this to move 200. Now, I'm not saying this move isn't possible on gold, okay? It's possible. It is possible, right? But is it frequent? Is it frequent? And is it going to come back and tap you out? We can see here, look, when price pushed down, we got re-entries to be able to get into the trade, but it never came back to our entry. It never came back, so we didn't have to fret. We didn't have to worry. Now, because of the daily picture showed us that this was a short that we wanted to get into, guess what? This now becomes a pair that we can think about holding down to the lower sides down here, which would be a 20-to-1. A 20-to-1. So I don't want to ramble on, but I need you guys to understand the significance of trading currency pairs. A lot of traders, a lot of YouTubers are just here to show you gold and their liquidity strategies, and everyone's looking at ICT videos and remaking them, okay? But just understand the basics right now, guys. Do a bit of market research. Gold is a extremely high risk trading pair. You don't need to, like, if I'm showing you guys Euro AUDs moving on average 70 pips, for example, yeah, well, I know that if I can catch 30 pips, if I can find a safe way to make 30 pips a day on on Euro AUD, my job is complete. They say trading shouldn't be fun. It should be boring. It should be emotionless. It's impossible to be emotionless when you're trading gold. It's impossible. They say you should trade gold if you want to grow an account quick, but if you want to stay in the game, you should be trading currency pairs. Gold, brokers will love you to trade gold because you'll blow your account very quickly. They will absolutely love you to trade gold because you'll blow your account and redeposit. Gold is something once upon a time I used to look at, have a browse, and then come back to it. Look at my watch list, guys. I used to look at all these pairs and I'd say, oh, let's have a look at gold today, see if we got a setup. Okay, no setup. Cool, let's see what else is cooking. I would never just wake up and eat, sleep, breathe gold. I wouldn't do that. So, if you guys are watching this video on my YouTube channel, let me know in the comment section, what pairs do you trade? What pairs have you been trading? If you trade gold, how successful are you with gold? What have you noticed with gold? Maybe there's something that you've noticed that you could help another person just by sharing your experience. But, the comment section is definitely for those of you to share your own experiences, because the reality right now is that most people are trading gold not understanding the fact that it's at an all-time high of being dangerous. 100 pips on gold. Look, this is a 100 pip SL. This 100 pip SL is crazy. That's crazy. The fact that you can have more than 100 pip SL. That's what I used to have with Bitcoin, guys. 100 pip SL or US 30. I used to have 100 pip SL or US 30. Now you're needing 200, 300 pip SLs of gold. It's not worth it. That same 100 pips that you're risking on gold is 100 pips that you could easily catch on a currency pair. The only difference is it might take you a day or two. But if you guys are working 30 days in a month and then getting paid, then why can't you wait 5 days or 10 days? I had to wait, right? I had to wait 2 weeks for this setup on Euro AUD. 2 weeks. 2 weeks. When I noticed that it was pushing higher and higher, I was like, okay, cool. Once it pushes up into the kill zone, let's see what happens. But I had to wait. And then once it happened, now look, for 1, 2, 3, 4, 5, 6, 7, 8, for more than 14 days, we've been profitable. So we wait 2 weeks for a setup that we can enjoy for the next 2-3 weeks. That really is what trading is. It's not getting in and out of trades on a 5-minute time frame, because, guys, it's going to burn your mental your mental capabilities of being able to look at this on a daily basis. You're going to get burned out. You're going to burn yourself out. You're going to stress yourself out and burn yourself out. So, for those of you who are interested in trading with me, my community is free to trade. You just click the link, join the Telegram, follow the bot so you guys can join my community, and you guys can see the currency trades that we're trading too. So, yeah, trade safe. Let me know in the comments what you thought about this video. If it helped, or if it didn't help, what you're currently trading, and maybe what you want me to do in the next video, and I'll happily break it down. And I'll see you guys on the next one. Peace. God bless.